Hello and welcome to another update video about Ethereum. So with Ethereum, I still have the possible bullish scenario on the chart here, but it's obviously getting unlikely now, also with Bitcoin being expected to do a new low. Basically for Bitcoin, I think we do have increased clarity now, and it looks like we're going to lose the most recent low, and I think Ethereum is probably going to do it as well. So probably for the next video, I'm going to put a new chart in place here, but it's not doing anything that we haven't talked about before. Yeah, we explored the idea of this just being an Elliott wave triangle and will break down. Difference to Bitcoin here on the Ethereum chart is just that as long as it's holding the $1,000 level, the overall scenario could still be bullish. So it still has a chance to rally from above $1,000, be it a corrective rally or an impulsive one. That is what we will need to see. I would actually primarily expect some kind of a rally or a corrective rally above $1,000. But we need to look at the structure then, if that will be, if it will be, let's say, yeah, just a corrective one, or actually already a third wave to the upside, which if we make it below the 1075 level from the 10th of November, well, then we have to start again the new impulse anyway. It wouldn't be a wave 3 then. Or well, it would be, because we have to reset the wave 2 to here then. But yeah, it's getting increasingly challenging. I would even, I would even say that we can start to lean towards the downside now. Ethereum was only one of the few anyway of coins where we identified some bullish potential. Most other coins are looking for lows, and it was quite clear, and it is quite clear. The difference with Ethereum is it still makes quite a decent impression, but the problem is obviously that we have a break below the 1130 level. That is the 78.6% Fibonacci retracement level. I've always stated that if we get below that level, we're getting into problems here. That is at 1130, 78.6% Fib level. I mean, theoretically, a so-called wave 2 correction, which would result in a move up in a wave 3, can still start from here. It can start from 1100, from the 88.7% Fib level. That's not ruled out. That's also why I have left my long positions opened, and they will be closed below $1,000, because that's where I have my stop loss. So yeah, I'm happy with that so far. They can still move up, and if they don't, that's fine as well. I did take profits along the way, all the way up when we most recently went to 1600, 1650. So I'm okay. But you all know what we did and what we looked at and how we approached this strategically. Yeah, not naively looking only at the upside or towards the upside, but having risk management in place as well. Very important, which means taking profits along the way, setting stop losses. And it's a whole, it's a whole trading system, and the idea of being strategic about it, not just, does it go up or down? And if I think it goes up, I put everything in there, which is of course not how you should trade, especially not with leverage in the current market conditions. I would never promote that. I know a lot of people are using leverage, but the problem is, as long as you don't really have a confirmed bottom in place, adding leverage to a trade is just sort of at risk of a washout, because you can still get these washouts, yeah, to the downside. So at the moment, now that we have 5 waves down here, that you can actually see, you have 5 waves down. This is the next decision point now, because what we'll see now after, so what I said, this could still be a wave 2. It's unlikely now, but it could still be one. We're possibly just retesting the 78.6% Fib level from below, and we'll then see a further decline. But as we have 5 waves complete now, if we rally now, this could be the wave 3. But again, I'm starting to lean more towards the downside. For Bitcoin, I'm doing that already, for many other coins as well. And here we just need to understand that this is on very, very thin ice, and it is most likely heading down and will now test the $1,000 level. The wave count that we explored in previous videos for that would be this a wave A, here a wave B, here a wave C, here probably the D wave somewhere, and then the E wave was probably this one. And then we are coming down in an impulse, and this would then be a wave 1. We would then be looking at a wave 2 to the upside, some kind of a retracement possibly now. that might get into the region of the previous wave 4 high here around 1180, 1190. And then a wave 3 down, a wave 4 up, and a wave 5 down. And that could hit here the $1,000 level. So generally, sentiment shift now rather to the downside. The probabilities for a bullish scenario have dramatically decreased by breaking below the 78.6% fib level. However, we haven't fallen below it substantial enough to completely make or get rid of it off the chart. That's why I still leave my long positions open. I intentionally give them a bit more space. And however, if we go below $1,000, this bullish potential is completely done. And then we're probably going to see prices of 880 first, and then maybe all the way down to 650. So it's all about risk management. You know, in the end, nobody knows. And therefore, we need to understand the different scenarios that are possible. And then just be strategic about it. Yeah. And I still read in the comments a lot of people, should I sell now? Should I buy now? Up or down? It's not as simple as that. That's why a lot of people fail in trading. It's player versus player, and you need to be strategic. You need to be more clever than most others, and you have to have an edge in the market. You have to have your risk management in place. And I think risk management is what most people are missing. Yeah. I would argue most people are putting most of their funds into a single trade or two trades. That's not how you do it normally, right? It's all about risk management. You know, one single trade is not there to make you rich or poor. Yeah, it's not that. You know, you're not going to get rich with one single trade. I mean, maybe there is the lucky person that does it, but then most likely in the next trade the person is going to mess it up again. No, it's all about having a series of profitable smaller trades. That's how most successful traders would approach it, and be successful over time. Yeah. Okay, and just be strategic about it and have your risk management in place, especially in the current situation, current environment. Still see a lot of people who put comments in where they lost thousands or lost whatever 70% of the value of their portfolio. Where if you don't put, you know, if you have it on the ledger and if you want to hold long term, you probably plan for that and you don't mind these fluctuations necessarily. But if you really trade, you want to have stop losses in place or have at least your position sizing in an adequate way that you can leave your trades a bit more space. But yeah, sorry for the waffle. Waffling. But yeah, that's my update about Ethereum. So we are now possibly seeing some retracement to the upside, but then most likely further downside. And as long as we're still above $1,000, we can't remove the bullish potential from the chart. Still a chance, but it's obviously getting less and less likely and more challenged, especially in the current environment where we have a lot of bad news in the space. Yeah. Okay, that's my update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.